Right, good morning, everyone. It's a beautiful Sunday, and thanks for joining into our round and search preview. Okay, so today, what we're going to talk about, it will be talking about how you can have the potential profit by identifying the accumulation of the big boys. Okay, so basically, this is not something that you will see, like it's not like other live stream or maybe other speakers that they are sharing. We are not going to talk about the how the technical analysis, how to plot the resistance, how to look for the chart pattern, and how to look into the indicators. So what we are sharing here is the operator analysis, which is actually developed by us, especially for Malaysian market. And if you know this, then you can actually find a lot of good stocks that you can look into it. And other than that, we have like the risk management side to actually to help every one of you to have a better performance in the stock market. All right. So because this one is mainly by following the big boys through looking at all this price and volume data and also the transaction data as well. So there's a lot of thing that is actually opposite of the what we have traditionally learned from technical analysis or maybe the fundamental analysis. So it's something that we all know, but what we are learning from the market right now, what is the available courses or the available education materials in the market is not sharing this. So that's why today here we are sharing this to every one of you. All right, so let's look into it. So I'm gonna share with you some of the charts over here that they previously that the big boys they have done the accumulation. So I have the list over here where previously they have done the accumulation. The price actually the big boys do the accumulation, which we call it the moving house, and then they start to push the price up higher. You will be surprised if you are able to identify this. Your trading journey and your trading performance will be much more easier. Okay, for example, for this case over here, this is usually how the big boys do the accumulation. When they are doing the accumulation, you would not notice it, even if let's say you're using indicators or any traditional technical analysis. Why? Because when they are doing accumulation, you would not notice about this stock. Why? Because they will do it quietly. They don't want you to know. They don't want to attract a lot of attention because they are buying the shares at the lower price. So when they want us to know is when the price start to move up higher. So when they move up higher, why they want to let us know is because that they want us to buy their shares. So when the price is in the markup stage, usually this is where they start to have attract a lot of attention, either through some of the news or maybe good fundamental news are coming out, or even like this case where they will have the technical buy. Okay, they will have the triangle breakout, so to attract more retailers to come in so that they can sell more of their shares. So big boys, you have to understand one thing is that they are different from every one of us. So every one of us, our retail investor, when we want to sell or take profit, we will sell all at one price. All right, because we have very little stocks in hand and the market is able to absorb that kind of shares. But for the big boys wise, they are accumulating a lot of shares in the stock market. So if let's say they are accumulating a lot of shares in the stock market, they can't sell everything at one price. So when they are selling all at one price, it will create a huge price drop. Then they are not able to attract retailers to come in to buy because retailers see the price drop, they feel fear. And that actually the big boys are not able to take the profit from that. So how do they take profit is that usually they will take the profit when the price is in the mid of markup. So when they mark up the price, and that is where they can attract the retailers to come in. So when the retailer comes in, they will not buy at the high side because retailer always think that, oh, it's too high. So retailer we always park the price at the lower point. So that is what a lot of retailer I find, I wouldn't say it's a mistake, it's a bad behavior, it's a bad habit, because what we have learned from traditional investment is always we want to buy cheaper stock, we want to buy undervalued stocks. we want to buy at a lower price so that we can actually lower down our costs, which in this case is totally different. Why? Because this is where the big boys are attracting us to come in. So when they start to see some of the retail investor or some volume that we are going in to park at the buy price, the buy queue, that's where they start to throw the price down lower. That's why you will see the price will have a retrace. So when they goes down lower, that's where we know that the big boys are taking profit. But they are not taking a lot of profit here. They would separate or divide their shares into a different tranche of shares to sell it out. So it will not cause a lot of price down. So when it comes to a point where they find that the market, there's not enough buyer in the market, so what they will do is that they will push up the price again to attract more buyers to come in. Then the buyers come in and park at the lower price to for the big boys to take profit. So that is the reason why whenever the price is moving up in the uptrend, there will be a retrace. The retrace is usually done by the big boys because they are taking profit, they are selling some of their shares out. But if the majority of their shares are being sold or taken the profit on the way up, let's say 80% are sold, their shareholding left about 20%, this is where it shows that the price is at the peak. So when it's at the peak here, then it will tell us that the big boys the price is going to go down. So during this time over here, we need to exit whenever it shows the sign that the big boys have not much shares in hand. So this will actually share with you in our 6-month trading course as well. So when to exit, where is the exit? So if you follow our exit over here, your exit timing will be very close to the high side. So before they throw the price down lower. So here's the question here. If the big boys are getting out from the stock, okay, do you still want to enter into a stock? The answer is no, okay. For them, whether they will still accumulate again is later on, because right now the big boys have already distributed majority of the shares and they have no point to actually accumulate the shares at the high side again. So why not they just wait for the price to go down lower after some time and then start to wait for any of the good news or good fundamental from that companies, then they come in to actually do another round of operation again. So that's why whenever the big boys are getting up from the stocks, you shouldn't enter into it. And you will see that the price is going down and down and down. So if you are able to find where is the accumulation or identify it, and you move in when the big boys they are ready to push the price up higher, look into this. Usually this is where we will have our entries, okay. So after accumulation, we call it the housewarming. So during the accumulation, we call it the moving house. So basically the big boys are moving the house into another house, okay, breaking all the shares into small portion into different accounts so that it's easier for them to do the markup and do the market making later on to create like a lot of volume in the market. So when they have the housewarming, which means that it's an invitation to every one of us to jump into that stocks. So that is the point, because for us as a retail investor, every one of us, first thing we want to know what stock to buy. Second, the most important thing is when to enter. So you don't want to get into the stocks where the big boys are doing the the moving house, the accumulation, because you never know how long they are going to accumulate the shares. The big boys, they have funds, they can wait, they can last very long, and later on that only they push the price up higher. So for us wise, we don't want to start our fund into one stock for too long. So that's why we need to find the right timing to enter, which is the housewarming part. So it is not like a resistance breakout or what. So we don't use the resistance breakout. If you use the resistance breakout, then it's a bit too late. So that's why our entry rules will be different from the traditional technical analysis from our experience looking into the stock market. All right. So once you are able to identify that the housewarming, you can see here, the housewarming here is about like 83 cents. The price actually goes up to 2 ringgit and 40 over cents. So how many percent of profit are there? So it's about 300 over percent. So within just about 3 months time. So this is something that a lot of retail investors, every one of you, do not know how to identify this, because you will never notice the accumulation part, because the accumulation, the volume will be low. Even last time when I share it to my clients, then they will start to see like, oh, they will ask me, okay, Kelvin, are you sure about this stocks, because this stock is not liquid? And then look into this. Okay, usually when they are doing the accumulation, it's not very liquid, the trading volume is very low. So you can see the highest volume here is about like maybe 20 over thousand of volume transacted, and before that is not liquid. So usually at this point over here, there's not much of news. And for one thing bad about every one of us is that we always like to have solid proof about this, or whether they are going to move the price up higher, but we do not know what is the solid information. So that's why a lot of retail investors, they rely on news, and also rely on maybe some of the fundamental. So all these thing is, first thing I talk about the news. The news wise is basically reporting what is happening. So if let's say there is no trading volume, no transaction is not active, so no news is going to cover these stocks. So they are just reporting what is happening. So that is actually to tell you, to get you updated what is happening. So it's not for us to look into ways to whether to jump into a stocks or invest into it. Second thing, the fundamental. Fundamental is, if let's say you are talking about quarterly report, is always delayed. So if let's say they announce right now, it will be 3 months ago. So this is one of it, is delay. Another thing is that if you understand the stock market or the current market, you can look into it. Basically the stock market is not trading on the fundamental. It's more about the expectation. That's why you can look into Tesla, Facebook, all these tech company. The value, the price per share is actually jumped up a lot. It shoot up a lot. Why? If you look back into a fundamental, it's not really interesting, but it's more on the expectation. Why they are investing into the expectation is because there's too much money in the market. Everyone is keep on printing the money. So all these institutional funds, they have a lot of funds. So when they have a lot of funds, so they need to pump into it, and then slowly to actually push up the price to attract more buyers to come into the market. So that's why there's always a saying, is that, which is not the saying but it's true in the market, is that how you manage a company and how you manage the share is totally different thing. There's no direct linkage, or it doesn't go in a parallel. You can have a good company, you can have a good business, good revenue, but it doesn't really, if let's say there's no demand in your stock, in your share price, or in your company share, the price will not move up higher. So the up until the end, what actually affect the price to move up and down is the demand and supply. So that's why when there's a big boys is coming in, they will create the demand. So when it creates the demand, the price will actually move up higher. When it hits to a point where they start to supply the shares out to take profit, then the price will actually start to go down lower. So that's why for myself, I am not sure every one of you, but for myself, I don't really look into fundamental, because for myself, I only look into short-term trading, mid-term trading, or even day trading. The reason is because I know how to look into the transaction data and then understand what is the intention, what is the next move for the big boys, what is the current intention for the big boys. If, let's say, they are attracting buyers to sell, to take profit, then we know that the market is going to go down, or maybe in short term, the price is going to retrace. So we can exit before the retrace. So all of this have the sign, okay? All of these are in the transaction data. So all of this information, every one of us are able to access it from the trading platform. Any broker that you log into it, you can see the transaction data, you can see the price movement. So everything are there. So the only thing is that whether you know how to interpret it. So in our 6-month course, what we're going to do is that we're going to guide you, share with you how to interpret this kind of transaction data, this kind of price and volume movement. So you will know what is the intention of the big boss, and then you react to it. So you will not enter into stock at the high side, okay? because you know what is the intention of it, so you won't get trapped at the high side anymore. So this one actually solve your problem of why you always get in at the high side. Okay, and then second thing is that you know what stock to enter. Okay, what stock they are doing accumulation, which stocks that the big boys are still in the markup period, they still have majority of the shares in hand, so we can enter into it. And then the third thing is that when to enter. So when to enter, you can look into it whether they have the housewarming or whether it fits our entry rules. Okay, so all of this, if you understand how the big boys actually works, it can help you, every one of you, to help your trading journey is much more better. For example, this is the first example over here that I share with you. You can see, I'll just leave it here so you guys can have a look into it, see how these big boys can push the price up higher. So in this case, the first case over here, the price actually move up like 300%, but not every one of them will actually move up 300%. Some of it will just be moving up just 100%, 100+%. Sometimes they even move up like maybe around like 50%. Like for example, in this case over here, the moving house is here, like I say, is not liquid. So when it's not liquid, so you will not notice about these stocks, but they are doing the accumulation. So you can see the identical things that they are doing, the pattern, the price movement that they have. So that's why it's not to actually identify the accumulation stage, or whether to actually move in together right along with the big boys for the price to move up higher, is very simple. You don't have to socialize, or you don't need any insider news. You just need the transaction data, because every one of us, we are living in the world of the data, okay, or you can call it a big data. So as long as you know how to interpret all this, basically you can actually take advantage into this kind of trades into the stock market. So you can see from here, 30 over cents, the price actually moved up to 1 ringgit and 30 over cents. So this one is about like maybe 400%. So after that, the price is going down. So usually this is where they are still doing the distribution. The price is moving up higher. So you can see there's at this point over here, they will try to do a lot of different chart pattern, and then to attract your attention to come in. So this is one of it. And then also we have another one, which is one of the stock that we looked into it last year. So last year, I'm not sure how much of the profit are you guys making from the market, which is a bad market last year. So bad market last year, there's a lot of people lose money as well. Okay, I would say majority of the investors in the market are losing money because they stuck in some of the stock before they can actually jump out from the bear market. So one thing also good about when you understand how the big boys works, so you will know when is the bear market is coming. So why I say that is because I've been using this method for many years, okay, for a few years. So whenever there is a bear market, most of the big boys, they will do one thing in the market where they are pushing the price up aggressively to attract buyers to come in. So usually in the market, if you see 1 or 2 or 3 big boys are doing this, then it's fine because they reach to a point where they want to take profit when they want to distribute. But if let's say you see all of the big boys in the market are doing this at the same time, we know that the market is going to turn back probably 1 or 2 months later. So when we see that it hits our exit rules or our take profit rules, then we have to exit. So during the bear market time, basically you are not holding any stocks and you will not enter into any stocks. So that's why this is how you can actually protect your profits and also wait for the right time to move up higher. So from our last year trading result, okay, for the RNS portfolio, is about like 30 over percent, okay, 30% to be exact. So in such a bear market, you can actually achieve 30%. So look into the good market, how much you can achieve. The highest return that we can achieve, I won't say the highest return, it will be about like 70% in 1 year. Okay, so that's why this is how much you can actually look into it. And consistently every year in the past 5 years, we are able to outperform the market. I'll show you the data later on. So let's look into the this example over here. When they are doing accumulation, is at about like 18 over cents, and they have the housewarming is about like 20 over cents, and the price actually move up to 70 over cents. So this one is quite a lot, 300 plus. But we didn't actually hold up to 70 over percent. We just hold up to 40 cents. So 40 cents is about 100% from that. So can you see that with this just 100%, I think a lot of you who wants your portfolio to have something to actually move up 100%, right? And not many of you can actually have this kind of experience before. So if you know how the big boys work, how to look into this accumulation, you can actually achieve this. You will see the percentage of price moving up higher. Okay, of course, one thing is because a lot of people, they are not able to achieve that, not able to follow through, maximize the profit, is because they do not know how. Because usually what you use in the traditional technical analysis is always the projected profit target. We don't use that. The reason is because these are more like an expectation. You are expecting this price to actually hit this price. Okay, the share price to actually hit this level. But in the market, it's not about ourselves. The market is about the big boys. How much the big boys want to push the price up higher. So in the profit target, whether we want to take profit or whether we want to exit, we always follow back the big boys. What is their intention? If let's say they have the intention to move up higher, then we move up. Okay, then we follow. So if let's say they seems like they have not much of intention to push the price up higher again, then we exit. All right. So another one here, you can see, zoom out for you guys to see. So not liquid, accumulation is done, and then housewarming 30 over percent move up to about 70 cents. But you will not be able to exit at 70 cents. Why? Because the 70 cents here, you can see there's a high shadow here, long shadow here. Usually from 70 cents, once it hit, they will straight away press the price down lower. So probably about, you are able, maybe during the day, you are able to exit about like maybe 60 over cents. So if let's say 30 over cents, you're able to exit about like 60, let's say 56 cents. So that is about like more than about 60% of the return with just such a short timing. Okay, so again, you can see the accumulation is here. And then other than this, let me show you the last one over here that you can have a look into it. Some of it is done long time ago. This one, let me find something that is nearer to the current market. So yeah, this is another one that you can see. Not liquid, accumulation is done, housewarming, price move up higher, and then if let's say you use our exit rules, you should be able to exit at this point, which is 38 cents. So housewarming is, let's say you move in at maybe about like 20 cents, 38 cents is about almost 100%, about 90 over percent HP Globe. This is one of the stock that we looked into it also last year. Okay, so this one have passed, so you can see the profit potential that you can make by identifying, understanding the big boys intention through the accumulation up until when they push the price up higher, right? So this is one of it. And if let's say you understand this, basically your whatever trading method that you want to use, you can actually use it. Whether you want to go for day trade, whether intra-day trade, or you want to look into short-term trade, or maybe you want to look into mid-term trade. If let's say you are a person that always want to buy at a lower point for your long-term investment, you can use this as well. Because what we are looking here is that the big boys intention or the transaction. So when we see some big boys actually coming into some of the stocks that have a investment, long-term investment value there, then you can see that big boys are coming in, which means the demand are coming in. That is the right time for you to move in. So basically, this is how you can actually average down your costs much more for your long-term investment. I won't say average down, but usually when we do trades, trading wise, we don't average down, but you can enter at the very right timing at the bottom. Okay, so this is one of it. So you can even look into some of our videos. So if let's say you're watching from Facebook or maybe from a YouTube channel, so you can find it in our video list as well. So we did some of the day trades, so you can have a look into it, how we look into the transaction data, which you can call it tape reading. So how does the transaction pattern actually tell us that they have the intention to move the price up higher? So all this is actually recorded, okay, live stream from there. So next week we're going to do a live stream as well. All right, so another stocks, like let's say Woodland, so you can see accumulation, the price moving up higher. Accumulation not liquid, the price has moved up to 140 over cents. Housewarming wise, probably we'll look into here around like 1.1. So if we are able, let's say we exit at this point, it's at 1.5, so 40 cents of profit, so about like 40% of profit from here. So this one was identified before the Chinese New Year. So you can look into our live stream, Chinese New Year live stream. I shared about this, but I didn't talk about the stocks. Okay, so right now they are in the markup stage. And then also they have a P&O. They have the accumulation. Right now the price is moving higher. Just that I don't really share this to my clients for these stocks is because it's not very liquid. So I don't want to share it out. So they have the intention to move up higher, but just that it's not liquid. So you guys shouldn't look into this as well. Why? Because once you enter, you might the price might not be moving up higher. Okay, tech cycle, previously they have the moving house here, so it seems like right now they will still continue. They will just wait for the right timing to move the price up higher because it's not able enough buyers in the market for them to take the profit. So we're gonna wait for this as well. Okay, 40 over cents up to 60 over cents. So, and also for, I forgot which one is it, I think IGR. Yeah, same thing for IGR, accumulation, about 50, 60 over cents, then the price actually move up to 1 ringgit plus. And this is the potential that you can look into it. Okay, so main thing is that most of you, I think if you are here in this live stream is because you understand how important it is for you guys to you understand that the market is actually affected by the big boys. So when you know that they are affected by the big boys, or they are the force that the price that actually move up higher, then you should learn into this. So we have the training course over here. So I'm not going to talk about the training course first. So I'm going to share with you guys our website. Okay, so you can see from our website, the last year portfolio performance is about like 30.55%. So average total return for 4 years, actually for 5 years, starting from 2017. So from here, accumulative of return, we are able to achieve like 144%. Okay, so it's not like really wow, but at least like you every year you are making about like 30 over percent down the road. So average out. But if let's say when the market is here right now, you can see things are coming back. We can start to see the big boys are coming back into the market. And then even with the bear market, the price is down, but we still see some of the big boys are supporting the price at a higher point to wait for the market to turn good again, and then they will start to push the price up higher again. So I believe this year we might be able to achieve more than 30% from the market. And if you look into KLCI, the cumulative return, the performance of the past 5 years is about negative 9.92, and then SCAP is about negative 7.73. ACE market is about 10%. So that's why this is how we can outperform the market here. So you can see 2017 48, and 2018 we increase it to about 59. These are the cumulative return. So these are the potential return that you can look into it. So we are having our training course on next week, 5th of March. So 5th of March will be our training course intake, the first intake. So basically it's 6 months. So in this 6 months, we are going to share with you how to interpret all these transaction data, including the transaction data of all the quote movement. What is quote movement? I'll share it to you. Quote movement is basically to identify this kind of price transaction, whether it's a true price transaction, whether the transaction actually comes in just to attract the buyers. So if let's say they are coming in just to attract the buyers, they will show it very obvious to every one of us. Like every few seconds there's one buy, few seconds there's one buy, few seconds there's one buy. But in fact, we know if let's say the big boys, they have the intention to push the price up higher, they will not just buying slowly. They will clear all the sell queue within seconds. Okay, you can look into our intraday trade video, so you can see like how fast they can actually clear all the sell queue. No matter it's queuing about 10,000 over, or maybe few 20,000 or maybe 50,000 is queuing at the sell side, they can clear everything in 1 second, and then they push up higher again and higher again and higher again. So that's why we need to look into this quote movement to understand whether this transaction is genuine or not. This volume actually coming in, whether it's genuine, whether it's big boys are attracting buyers, what is their intention? If let's say their intention is to attract buyers to just by creating activities, then we stay out from that stocks. Okay, so this is the quote movement. Also, we look into the buy sell queue, also the market depth. So the market depth is something that a lot of people, a lot of retail investors in the market, they mistaken or they misunderstand. Usually they will think like, oh, let's say in this point, 1 ringgit and 13 cents, there are 3,000 over buy queue there. They will think this is the support. So if let's say this is the support, they will think like, okay, maybe they park their buy queue at 114. So when they park it at 114, they think that they are buying at the high side, but in fact, these are just buy queue, buy order. It's not transacted. So the big boys can cancel it off anytime. So when the big boys, they start to monitor and see there's a lot of retailer going into these stocks, okay, queuing at the 114, what they will do is that they will cancel off their volume and then throw it down to those retailer left in the market. So within second, so retailer in the market, they will start to feel much more confident because they are able to buy at a lower price. They thought they buy something cheaper, but in fact, they actually just jump into the trap from the big boys. Okay, so these are the things that a lot of retailers didn't really realize. A lot of retail investors, we know that there are big boys in the market, but we do not know how to look into it. By using traditional technical analysis or the indicators, it doesn't help you to understand or to find the big boys accumulation or the big boys intention, because whatever we have learned from the traditional technical analysis is too surface. If you look into study into a lot of all these indicators or the technical analysis side, you'll find that all these indicators are mainly to tell us what is currently the price movement is, but it doesn't tell you the depth of it, and also the theory behind the traditional technical analysis is talking about the overall market, including every one of us. We have the impact in the market, but we know in the market, every one of us, we are not together. We have different preference or expectation in the price. So our buying price is different, our profit target is different, the weight, how much we want to take profit is different. But when there's a big boys in the market, they are able to push the price up higher in according to their direction, in one direction. So that's why the theory, the base, the core of the traditional technical analysis is not working in the market anymore. Okay, all right, so this is how it works here. So we have our training course, so you can have a look into it. The next training course is the 5th of March, and then once you can actually sign up now. So once you sign up to it, you can actually have access to all of these videos, the lesson that we have done in the previous revision class. So you can see this is the revision class from the past, from the last month, okay, last month training. So moving house, how to identify the moving house from here. We go through with you how to select the moving house, so you can actually learn from it. So we go through it one by one with you in details, let you understand the reason behind how all these prices are being shaped, why the big boys want to do this, why the big boys are doing this kind of moving house, why they are transferring the shares now and then and take a longer time to accumulate the shares. So all of this, you can learn it once you subscribe to the training course. So you can see all lesson in one. This one is the last revision class. for our 2021 intake. So you can see we go through it with you guys, all of this, and of course we have the day trading as well. So for day trading side, you have to open a trading account with me, so you can actually attend for the day trading. Okay, so this is one of it. So other than that, we have for the training course. Okay, so it's not just 2 days training course, then you can resit again and again. So basically what we do is that when the intake starts, we have the training course the first 2 days to let you understand the theory of it. So once you know the theory of it, then we will go through a revision class, a 6-month revision class. So every month we look into different things. First month we look into risk management, stop loss, and also where is the exit rules, when to entry. Then the second month we look into the accumulation part, how to identify the moving house. Then the third month we look into short-term trading, and then third and fourth and fifth month we're gonna look into a short-term trading. So we have a trading a strategy there, and also we have the intraday trading. So intraday trading, if let's say you have your trading account with me, so you can start anytime. So that will be another 6 months of training. So that one will be usually during the weekdays in the morning. I'll share with you how to look into it and what type of things that you want to look into it. So the intraday trading wise is I only open for those who have attended the operator analysis training course, the 6-month training course. Why? Because you need to understand how this works. What is the mindset of the operator? So the big boys. Then only you can look into all this transaction data. If let's say you do not know about this, basically you have the criteria, you have the strategy, you won't be able to understand the real reason behind of all the price movement, then you will not achieve that kind of result that we can do it. Okay, so the next training course, you can go to the link in this post. So you can have a look into it in this post to find that is a landing page. Okay, so the pro package. So maybe I'll just add this into the comment section. So have a look into it. So if you are a person who want to find out, who want to learn and trade yourself, or you want to learn this skill so that in the future, if let's say you have retired, so you can look into this. This is something that you need to know about it. Okay, so I've put it into the comment section so you can have a look into it. Okay, so click that link and then go through it. There's the details of it. So the training cost is actually 3,888. So if for next month onwards, we have to adjust the price. Okay, the price will actually increase. For what I think, I don't want to increase too much, but we have no choice. Why? Because our software vendor, they are increasing the price, so we will increase the price to 3,988. Okay, so if you sign up right now, it will be 3,888. So we can save a bit from that. So I don't want to transfer too much of costs, okay, into all of you, because I want you guys to learn about it. So this is something that you have to know if let's say you really want to learn about how to trade in the stock market, and this skill will actually stay with you for a very long time, so you will not forget about it. So even though if let's say in the future you have mastered this skill, if let's say you have lost a job or something like that, like another COVID actually happens, you can trade this at home. All right, so and also another thing is that if let's say you are not a person that you don't want to learn about this, very simple, you can just open a trading account with me. So once in a while, if let's say I find some of the good stock, I'll share it to my clients. So I can only share it to those who have a trading account with me. Okay, all right. So this is the preview session over here, that how the big boys that they can do accumulation. So you can see the potential profit that you can actually make by knowing where is the accumulation and move in when they are ready to push the price up higher. So this will definitely help you to identify all this accumulation after you attend this 6-month training course, and how to interpret and read and take advantage of all this data that we have in the trading platform. Okay, so if you have any question, you can just write it down in the comment section, then we'll reply you in the comment section. Or if let's say you have something that you want to ask us, is more you don't feel like comment into it, you can always PM us, okay? Or you can comment a PM at the comment section, so we'll send you a PM to understand more about your inquiry, so we can help you much more better. Okay, so the training course will be on 5th of March, which is next week. All right, so don't miss this out. So on April, we have to adjust the price, so sign up right now. Especially right now, we start to see a lot of big boys. They have done the accumulation, they are doing the accumulation, they are starting to mark up the price. So you don't want to miss this chance to miss out this kind of opportunities in the market. Okay, so make this 2022 a good year for your portfolio. All right, thank you very much. I'll see you guys again in the next live stream. And remember, if you like this video, give us a like. And also, if you are watching this from YouTube channel, subscribe to our channel, like us, and share this video out to more people. Let them know the wonderful of following the big boys in the stock market. See you guys next time.